purchase was with your company, and then the personal bet on it as well is really big. I think some people noted that it might be one of the largest purchases of Bitcoin at that price from an individual. Because a lot of early Bitcoiners that I know bought Bitcoin when it was $1 or a penny. And so they might have 10,000 Bitcoin, but they bought it, the cost basis was much lower. So I think that was really shocking to me. I think was just kind of blown away by how.
Well, I wish I'd figured it out at $1 or at $10 or at $111 or at $1,000. But I have this motto: better late than never.
Hey, I still think we're very early. I think you're in the same sort of mindset. In fact, Michael, how early do you think we are? Like on the stage of Bitcoin's evolution, where are we on that adoption curve? Because you've been around, you've run MicroStrategy for such a long time, and you've seen different innovation cycles play out. Where are we on that curve?
Look, I think this is a classic paradigm shift, as Thomas Kuhn would say, in the structure of scientific revolutions. And you can see them with the automobile, with a mobile phone, with airlines, with crude oil. Up until the paradigm shift starts, you could go people tried to create airplanes that flew for hundreds of years. Leonardo da Vinci was thinking about it. And up until 1902, every learned person in the universe could give you a million reasons why airplanes will never work. And in 1903, a couple of bicycle mechanics from Dayton, Ohio, not the people you would think would invent the airplane, they figured it out, bicycle mechanics. And from 1903, from what is it, Daedalus tried to fly too close to the sun, or Icarus crashes and burns. Thousands of years people have been trying and failing. In 1903, it sort of works. By 1969, we're on the moon. And so the S curve, it kicks up, it accelerates. And with all these technologies, I think the time to buy them is when they're big enough that it's obvious they work and they've got massive momentum. But when 99% of the people on the street don't understand them. And in this particular case, I say it's reasonable. 99.9% of all the assets in the world are in alt assets. $250 trillion in bonds, stock, real estate, precious metals, derivatives. $250 billion in Bitcoin. 0.1%. 10 basis points. I don't think that means that 99.9% of the people don't know, but maybe 99% don't really understand it. So on one hand, we know we're early because it's the solution to $250 trillion worth of a problem. Right? The problem is in an aggressively expanding monetary environment where fiat currency is not going to hold its value, i.e. if I'm sucking 10 or 15% of the energy out of a unit of currency every year, and it depends upon which unit of currency, right? In Argentina or Turkey, we're losing more than 10% energy a year. In the US, we could debate whether it's 10 or whether it's 15. If you looked at the M2 monetary supply, right, maybe it was 5% expansion for 10 years, and now it looks like it's 20% this year. And what's your forecast for next year? Right. In an environment where you're expanding the monetary supply, you're sucking the energy out of the unit of currency, all the equities, all the bonds have to be valued as the discounted value of the cash flows. And so the discount rate is equal to the risk-free discount rate. Seems like it's the monetary expansion rate. And so if the money supply is expanding by 10%, the discount rate's got to be 10%, which means that the fundamental underpinnings of a bond based on its cash flows have to be discounted by 10% a year. And an equity has to be the same way. So everybody in the world is, if you've got real estate, you're valuing the real estate based upon the discounted cash flows of the rents. And if you got a bond, you're valuing the bond based upon the sum of the discounted cash flows of the bond. And if you got a stock, you're valuing it based on the sum of the discounted values of the stock and the fiat currency in the system where the the entity is doing business, whatever that might be. So everybody's holding those assets. And in a world where the fiat currencies are expanding at 0% a year, there's no problem, right? The underpinning, if the US dollar was expanding at 0% a year, the underpinning of the currency, the base currency layer is stable. You have hard money. No one's got a problem. And as we expand it, everybody's got a problem. And now you've got a solution. And 99% of the people don't understand the solution. Ergo, we're very early in the S curve, but we're 250 billion into it, which means that when the fire was, when we were at $1 billion, it could have been snuffed out. I mean, you could figure out what could have happened. The IRS could have given you a hostile tax treatment. The government could have made it illegal to own it. You could go through a parade of things. The forks could have forked again. Hackers could have found a way to hack the blockchain and drain off the value. Each of those things could have been debilitating to its growth. It's just like starting a fire. It's like you can snuff out the flame, but once it's a forest fire, not so easy to snuff it out, right? So I think that we've got a forest fire. We have a fire in cyberspace. It is raging with $250 billion worth of monetary energy. I think it's too big to stop right now, or at least let's just say it's conceivable to stop the forest fire, but it's a lot harder to stop the forest fire than it is to put out the campfire. It was a campfire when it was $1.
Totally. Michael, there's a lot of things to unpack here that I want to touch on. One is I love that when you get into talking about like discounting cash flows and looking at how the Fed and other central banks influence how investments are made, it's essentially a measuring stick, and they keep changing that constantly, which makes an investor like yourself or a businessman look at like, how do I measure different investments? And if they distort that underlying measurement of the successful allocation of capital, then that makes running a business super hard, because then you don't know what return you're getting, because are you beating inflation? Are you beating this distortion in the economy?
Yeah, it's really a question of your relative framework, right? If you take as a given that dollars are constant and valuable, then of course you would never trade your dollars for anything that had volatility, because you would see that as risky. But if you take as a given that the dollar is going to lose 10% of its value every year, then it changes your frame of reference. I think that a metaphor which is very useful here, or a model that's very useful, is the model of adiabatic lapse, or in thermodynamics there's something called an adiabatic system. So if I'm at sea level and I've got constant pressure, I've got constant oxygen, and I've got constant energy. Energy is heat. As I suck the energy out of a system, the temperature falls. So if I take you up 1,000 feet, you lose 3 degrees Fahrenheit. If I take you up 10,000 feet, you lose 30 degrees Fahrenheit. That's why in Aspen or in the mountains, you've got this cool climate in the summer. It's all quite pleasant if it's Aspen in the summer. On the other hand, when I take you up 50,000 feet, you lose 150 degrees Fahrenheit. Now you go from 70 degrees above, 70 degrees Fahrenheit to minus 80 below. But that's not the only problem. The other obvious problem is that as the pressure falls, oxygen falls out of the solution. And, when you go to 9,000 feet, you've lost 30% of the oxygen. When you get to the top of Mount Everest, you've lost 80% of the oxygen. If I kick you out of an airplane at 50,000 feet, if you don't suffocate to death, you'll freeze to death. You choose your poison. So if I keep expanding the monetary supply, it's the same thing as if I created a room at 70 degrees with oxygen and I kept expanding the room by 10%. I'm creating an adiabatic lapse. And I'm simultaneously freezing you and suffocating you. And so the real dilemma here is that in a fiat system with a monetary supply that's expanding at a rapid rate, you're freezing and suffocating everybody doing business in the currency. It's just a question of how fast am I it's like marching a bunch of Boy Scouts to the top of Mount Everest, and I've got a little altimeter, and my altimeter says, oh, well, I'm at sea level, right? The altimeter is reading inflation. And so if I set the altimeter to a market basket of YouTube streaming videos and Domino's pizza and manufactured goods with a 5% variable cost, I pretend that I'm at sea level, but I keep marching the Boy Scouts up 5,000 feet. And at 5,000 feet, they can't breathe, but we're at sea level. And then I march them up to 10,000 feet, and now they're all freezing cold. But I say, no, can't be, we're at sea level. And I keep marching them up. And eventually I march the Boy Scouts to 20,000 feet, and they're all froze to death.